Well, now it's my turn to proceed with the presentation. Let's consider the financial and economic performance of Gazprom Group. As explained by my colleagues, 2020 saw the ideal storm in the global commodity markets. It peaked in April through June, with causes very well known. First and foremost, it's about lockouts and lockdowns, as well as other measures related to COVID-19. These caused a lower demand for natural gas and oil. Sometimes it was abnormally low. Secondly, the pandemic was further aggravated by the disagreements between participants of the OPEC Plus agreement as to how the deal could be extended. Once it expired in March 2020, at the end of the month, oil production went up, hence the global commodity prices went to their record lows. Thirdly, the winter of 2019 and 2020 was abnormally warm. Average ambient temperature in Europe was 3 degrees higher than the average across the last half-century. For natural reasons, this constrained demand for gas in Europe. Lower demand has resulted in turn with overstretched gas storage capacities. In March 2020, underground gas storages in Europe were 60% full, while if you consider the average numbers of March in the last 5 years, it was never above 38%. Fourthly, LNG suppliers had to continue with their supplies, even incurring losses. This resulted in excessive supply of gas in Europe. As a result, European gas hub prices plummeted in the first half of 2020. In May, they hit record lows from 1995. The minimal price stood less than $1 per MMBTU, or less than $30 per 1,000 cubic meters. This price was 4 times less than the price in early 2020. The extraordinary circumstances just explained became a most complicated stress test for Gazprom's financial position. Now we can say that we lived through this stress test with pride, first and foremost thanks to our conservative financial policy. Please be reminded that Gazprom's budget for 2020 was made in such a way so as to include a significant reserve fund or liquidity cushion of nearly 700 billion rubles. This liquidity cushion allowed us to finance all of the company's liabilities without any additional measures to adjust the budget. However, we understood how acute the situation was. Throughout the year, we ran a monthly exercise to analyze all of our costs and income lines line by line, and we updated the budget not only for the holding company but also for the sub-holdings, in particular Gazprom Neft, Gazprom Energo Holding and Gazprom Межрегион Gas. Budgets of all our subsidiaries went under regular control with strict focus on cost optimization. This approach has resulted in very specific positive results in the crisis environment and became a good foundation for longer-term improvement in efficiency of our budgeting process. In 2020, Gazprom continued working to centralize the cash flows and liquidity. As at the end of 2020, the single cash pooling system included 583 companies of the group, and total consolidated liquidity exceeded 720 billion rubles. A single settlement center and a single cash pooling system for the group allowed us to distribute the cash flow efficiently and reduce the volume of external debt required by the subsidiary companies. This was made possible thanks to intragroup financing. In 2020, its volume went up nearly 5 times to reach more than 48 billion rubles. Another productive instrument to support our work was banking supervision of the group's contracts. A fully-fledged implementation of this instrument allowed us to control expenses under Gazprom Group's contracts with external counterparties. With all these tools and instruments playing an important role, nonetheless, a major response to external challenges came through a major cut in operating as well as capital expenditures. I'm going to tell you more on that. Gazprom Group's operating expenses in 2019 stood at $99 billion. In 2020, that was lowered, $79 billion. The gap is 20%. When doing the cost-cutting exercise, it was important for us to maintain the production plan intact and ensure reliability of gas supplies to off-takers. We managed to save a lot on optimizing procurement of oil and gas. We reduced the costs for exploration, heat and power supply, as well as a number of other administrative and managerial expense lines. Outside the cost optimization plan remained the so-called protected lines, such as taxes, payroll, social payments, insurance, as well as COVID-19 related expenses. On top of that, the free cash flow of the company was supported to a great degree by optimized capex. Across the group, it went down by 27% from $27 billion in 2019 to $20 billion in 2020. Most of the cuts was achieved in the gas business, more than $4 billion. We reduced the capex across a broad spectrum of projects. This optimization, however, did not affect any rescheduling for the key projects. Now we're targeting the so-called cautious recovery scenario. We keep optimizing operating as well as capital expenditures. When shaping up our budget for 2021, we set the limits while considering the results achieved on the cost-saving side last year. Even with the cost-saving measures in place, the extraordinary drop in gas prices in the first half of 2020 resulted in a negative outcome as expected. The EBITDA went down, hence our net debt to EBITDA went beyond the comfort zone. As at the end of 2020, it stood at 2.6. And throughout the year, there was real threat of net debt to EBITDA growth above 3. In order to address that threat, we acted preventively. Thus, we managed to minimize the reduction of our EBITDA. In order to do so, we introduced systemic cost-cutting, as I have already explained, and secondly, increased exports of gas in terms of volumes given better pricing environment in the second half of the year. The EBITDA went down for every company across all the oil and gas sector. However, our drop was 17 percentage points less than the industry average. We have reduced traditional loans by 129 billion rubles as compared to the original plan. And then in October 2020, Gazprom became the first company in the CIS to place perpetual Eurobonds. Please be reminded that under IFRS rules, this particular instrument does not increase the company's debt burden, but rather is accounted for as equity, 100%. We issued $1.4 billion and 1 billion euros worth of Eurobonds, perpetual Eurobonds, which resulted in 1/3 of the total placement program for the holding company. In March 2021, the Bank of Russia registered an issue of perpetual ruble bonds. They targeting the program to improve gas availability and build the local gas distribution grids. Project financing was also fast-tracked. In August 2020, we closed a deal of project financing for the second stage of South Russian field in the amount of 40 billion rubles. In the future, we expect to proceed with this format of financing in order to develop our own fields as well as those where we have strategic partners. Simakovskaya with Rusgazdobycha, Levorskaya and Noviskaya with Lukoil, and Urengoyskaya with German company Wintershall. For 2022, we are targeting project financing for gas processing complex in Ust-Luga. Diversifying the sources of financing allows us to reduce the burden on the company's balance sheet. We expect that in 2021, the net debt to EBITDA would come down to our comfort level, which is lower than 2. Thanks to these measures, in the ideal storm situation, Gazprom responded well and efficiently. This is proven by sustainability of our credit ratings as well as positive reviews from the market analysts. Across 2020, all international and Russian rating agencies confirmed or remained in place the credit rating of Gazprom. As compared to the general background of the oil and gas market, I can give you this example. Like last year, the credit rating went down for 36% of all oil and gas companies in the world, while 27% of other companies had rating downgrades. Thus, even in the crisis period, rating agencies still certified sustainability of Gazprom's financial position, and the equity markets responded equally. PGC Gazprom shares remained attractive in 2020. More than 75% of investment analysts recommend to buy PGC Gazprom shares, as at the end of 2019, it was 58% of such recommendations. Please note that recommendation to sell is not seen for Gazprom currently. Please mark it as well that PGC Gazprom is sustainably in the 22 companies of MSCI Russia index with the relative weight of about 17.5%. Please be reminded that in 2019, the board of directors at PGC Gazprom approved a new dividend policy for the company. It targets more dividend yield for the shareholders with a gradual increase to paying 50% of IFRS net income. We have already discussed the macroeconomic and pricing environment of 2020. What I can add here, in the current circumstances, about 60% of all largest international oil and gas companies have announced either reduction of dividend or decided to discontinue them completely. About 90% of such companies have reduced or cancelled their buyback programs. The total payment to shareholders or yield to shareholders for international oil and gas companies went down by 25%. However, Gazprom's management decided in 2020 not to adjust their net income downward and stream 30% of IFRS net income as dividend. This translates to about 36% of 2019 adjusted net income. As a result, we paid 361 billion rubles as dividends in 2020. Thus, we met our commitments and even exceeded those commitments of the new dividend policy. PGC Gazprom became one of the leaders in terms of dividend payments of all Russian public companies. Those measures that this company took to improve the financial performance and positive development of its operational numbers met the recovery of oil and gas markets in the second half of 2020. Thus, in the second half of the year, we managed to offset the losses of lower prices early in the year and, more importantly, get back into pre-crisis levels in terms of exports volumes. As a result, our numbers for 2020 appear to be better than major metrics of the adjusted budgets and expectations of most analysts. Our revenue stood at $88 billion, while EBITDA was $20.4 billion. These results allowed us to finance all of the projects we had planned for. We also maintained comfortable liquidity. The total amount of deposits and cash equivalents at the end of the year stood at $14.2 billion. This exceeds our maturing loans for the upcoming year by 1.5 times. Most of the financial results comes from the gas business, producing $53 billion of revenue and $10.1 billion of EBITDA. The second most important segment of the group is oil business, which generated $5.8 billion of EBITDA. Given the high volatility of last year, the utilities segment of our business played a major role as well. It provided sustainable EBITDA of $1.5 billion and a positive free cash flow exceeding $400 million. Clearly, it was impossible to avoid a drop in financials in 2020. One must admit, however, that the pace of Gazprom's revenue and EBITDA coming down was more moderate than across the largest oil and gas companies on the average. This was ensured thanks to the competitive advantages of Gazprom and timely measures to improve the financials, and also a well-balanced structure of the group's business. Considering Q3 and Q4 of 2020, the market environment improved significantly. We still maintained, nonetheless, a conservative approach to our budget composition for 2021, and we're also targeting very strict limits on operating and capital expenses. We base our budget for 2021 on conservative assumptions. They are rather modest given the current export prices, however, and even though they are, we still see a significant growth of financials. Revenue is up by 16%, the EBITDA is up by 9%, the free cash flow is back into the positive, while the liquidity cushion is growing and the leverage is coming down. The CAPEX program for the holding company in 2021 remains at a relatively low level of 902 billion rubles. The group's CAPEX is going to be slightly higher than in 2020, standing at around 1.5 trillion rubles. This increase is related to the expanded program of local gas distribution network construction in the regions by Межрегионгаз. The first 3 months of 2021 demonstrated a significant improvement in the global oil and gas markets. We analyzed our budget and the actual numbers for the first 3 months for 2021 and updated our forecast for the full year. Based on the current market situation, we are expecting a significant growth of Gazprom Group's financials and a reversal to pre-crisis levels. Our EBITDA is going to grow by more than 50% as compared to 2020, as compared again against the more conservative growth of 9% in the original budget. Now, the growth of net income is definitely going to move up the dividend base, while control of the CAPEX will ensure free cash flow going back into the positive. The free cash flow is going to cover dividend payments for the year of 2020. The leverage control is going to take our net debt to EBITDA back into the comfort zone of less than 2, and we believe 1 through 2 is the comfort zone for us. Growth of the income side is going to reduce the need for bringing in new loans by more than 100 billion rubles as compared to the budget for 2021. The positive forecasts of free cash flows for 2021 allows the management committee to recommend paying the dividend in the amount of 50% of adjusted net income as early as based on the results of 2020. Thus, we are 1 year ahead of the dividend policy in terms of this target level. This serves to prove yet again that growing dividend yield is a priority for the management of Gazprom. In 2020, there were major non-cash items which resulted in lower net income. In particular, I'm talking about accounting lines of 605 billion rubles. According to the dividend policy, non-cash items serve as a basis for adjustment for the net income. So in 2020, or based on the results of 2020, the dividend base is 595 billion rubles, significantly exceeding the net income profit. Half of that amount, 297 billion rubles, will be paid as dividend. The final recommendation is to be made by the Board of Directors in May. Starting from the following year, based on the results of 2021, the 50% payout is going to be the minimal threshold for us. On top of that, we expect the free cash flow to fully cover the dividend payments. It is important to market that Gazprom is fully committed to sustainable development principles. Caring about the environment and ensuring safety at work are among our priorities. They are well integrated into the corporate governance system already. In particular, we have midterm and short-term goals to reduce emissions, which we achieve every year thanks to the measures we undertake. The carbon footprint in gas production for Gazprom is one of the lowest in the industry. Our efforts to preserve the climate and counter climate change are reflected in the company's ESG ratings. Gazprom has leadership position of all Russian oil and gas companies in CDP ranking, which is one of the most respected. In order to achieve strategic goals and sustainable development, we have a dedicated policy recently developed, and in the nearest future we'll have it approved by the Board of Directors. On top of that, we have launched a project to consider low-carbon scenarios up until the year of 2050. Our next steps include establishing a Sustainable Development Committee under the Board of Directors and appointing a senior independent director. As explained by my colleagues today, the European gas market has recovered after the stress of the first half 2020. This is clearly demonstrated by gas price charts across the recent 9 months. Given a visible improvement of the market environment, many investment analysts are marking a good upside for Gazprom share prices. We are confident that as the external markets improve, the investment attractiveness Gazprom will be reflected in its market cap too. To conclude my presentation, I would like to emphasize it yet again. The growth of shareholder value is clearly the priority for the management team at Gazprom, and we expect Gazprom share price to benefit from an upside. There are reasons for us to believe so. First and foremost, Gazprom has very strong fundamentals, which we clearly demonstrated in the crisis year of 2020. And secondly, improved environment in the oil and gas markets and the expected growth of Gazprom Group's income have not been fully reflected in the valuation as yet. Thirdly, Gazprom is going to develop based on sustainable development principles. Every year, we're reinforcing our work in the field of environment, safety, social responsibility, and corporate governance. Fourthly, our long-term strategy ensures well-balanced development of the business based on our key competences. Fifthly, we intend to grow shareholder return while maintaining sustainable financial position thanks to generating a significant free cash flow. Thank you for your attention. After a 5 minutes break, we are going to start our Q&A session.